Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
We did mention our big story at this hour. President Trump and President Putin of Russia speaking today in a long phone call, about 90 minutes, on how to bring an end to the Russia-Ukraine wall. President Putin committed to limit Russian attacks on Ukrainian energy assets, but did decline to agree to a broader 30-day ceasefire as the United States had sought. With more, let's head to the White House and to Bloomberg's Tyler Kendall. She's there on the lawn of the White House. Tyler, is this a step forward to ending the war between Russia and Ukraine?
Well, Carol, the White House would like to paint it as such, but importantly, you mentioned there Vladimir Putin falling short of backing a 30-day ceasefire proposal that the U.S. had been hoping for. Importantly, that White House readout goes on to say that negotiations will start for a maritime ceasefire on the Black Sea, followed hopefully by talks for a full ceasefire and then a more permanent peace. Importantly, I just want to point out that the last time Zelensky was here at the White House, that Oval Office meeting devolved. He then went to Europe and presented to our European allies a similar path, that he wanted to see a ceasefire in the sea and the sky, as he called it. Bloomberg News had been reporting that Russia might have been trying to slow roll these negotiations earlier this morning, breaking the headline that Vladimir Putin would like to see a halt of all weapon flows into Ukraine, or at least, according to sources familiar, the halt of U.S. weapon flows into Ukraine. It remains to be seen if that is something this White House would really get behind, considering just last week it did reverse its own halt on U.S. military assistance and intelligence sharing in order to get Ukraine to sign on to this 30-day peace proposal. Carol, just quickly, still big questions, particularly considering that this readout does say that both countries want a lasting peace. That is raising questions about what that really looks like, considering that we know that our European allies and Ukraine have been asking this White House what sort of firmer security guarantees they are willing to provide.
Hey, Tyler, just very briefly, 15 seconds. Do we know what Ukraine would be giving up in exchange for this ceasefire?
Well, that really remains to be seen. At this point, they have said that they are willing to negotiate, but they need Russia to also come to the table. Ukraine has asked the U.S. to ramp up sanctions if they do not get this 30-day ceasefire into effect as quickly as possible.
All right, we're going to leave it on that note. Hey, Tyler, thank you so much. Tyler Kendall, Bloomberg News reporter there on the lawn of the White House. All right, let's stay with this story, because back with us for someone to share her expertise on Russia, its longtime leader, is Dr. Angela Stent. She's senior fellow at the Brookings Institution, a member of the Council on Foreign Relations, a former national intelligence officer for Russia and Eurasia at the National Intelligence Council, and she's also the author of Putin's World, Russia Against the West and With the Rest, which I am guessing she is probably working on updating. She joins us from Washington, D.C. Dr. Stent, always good to have you with Tim and myself. First of all, I'm just curious about the optics of how we got to today, and whether or not you see this conversation and the headlines that we have seen out of this conversation between President Trump and President Putin. Is this progress? Is this a step forward?
So thank you for having me on again. The way we got here is right. The President Trump said during the campaign that he was going to end this war in 24 hours. It would never have started had he been president at the time. It took a little more than 24 hours to get this particular phone call with Putin, although we know that he had previous ones after his election. And so he got the Ukrainians, by putting pressure on them, to agree to a 30-day total ceasefire, and that's what he said he wants from the Russians. I've just been reading the Russian readout, the Kremlin's readout of the talks. It's a little different from the one that we got from the U.S. side, and it mentions that Trump asked Putin for a ceasefire on hitting energy and infrastructure targets. And it said that, Putin was favorably inclined to it. It didn't actually necessarily say that he agreed with it. And a lot of it had to do with the restoration of U.S.-Russian relations. And apparently they're going to organize hockey games between Russia and the United States. But the thing that's most notable in the Russian one, and I think your correspondent already alluded to it, is that Putin's saying that they have to get to the fundamental causes, the root causes of why this war broke out. And that's going to go right back to NATO, to Ukraine wanting to be part of the West, and to Putin essentially saying that can't happen. So I will be curious to see how this works out. I'd also like to know how they're going to enforce this very limited but still important ceasefire. Don't forget, Russia has destroyed 70% of Ukraine's electricity production during this war. How are they going to monitor this, and then what comes after it?
But Angela, does it seem like to you that it is indeed the beginning of the end of this war?
It may be. I think it's certainly the beginning of the U.S. and Russia reestablishing relations, and we've heard that from President Trump. Is it the beginning of the end of this war? I think the jury's out on that. I think we have to see how long Putin drags out the negotiations before he agrees to a total ceasefire. And again, he hasn't really shown that he's interested in ending this war anytime soon. He's much more interested in restoring these relations with the U.S. and ending his isolation.
That's interesting. The other thing I wonder, Angela, and something that we've talked about with you before, I mean, are there ever really any guarantees that President Putin won't try to invade Ukraine or another country again? And how does the outcome of this negotiation for an end to the war kind of determine the likelihood of that happening again?
So as President Zelensky, unfortunately for him, pointed out in the Oval Office when he then got the vice president very angry with him, Russia has violated every ceasefire it's signed with Ukraine, certainly since the annexation of Crimea in 2014. And Russia has also violated every treaty it's signed with Ukraine since its independence. So I think one has to be very skeptical. And this is, of course, why President Zelensky, again, unfortunately for him, in the Oval Office, wanted to talk about security guarantees. Because without very robust security guarantees, there's absolutely no reason to believe that Russia wouldn't try and invade Ukraine again. The best security guarantee we know would be Ukraine joining NATO. That's been taken off the cards now by the Trump administration. But it needs these guarantees. And the Europeans, the French, the British, and other European countries have said they're willing to provide security guarantees, boots on the ground to be a stabilization force once the war ends. But they say they need American backup for this. And that's something which the Trump administration has not committed itself to.
Angela, let's say this is the beginning of the end of the war, and it does end. What does Russia look like on the other side of this? Is it stronger or weaker than it was? Is Putin more emboldened than he was pre-invasion?
Yeah, so what it looks like is, the economy is not in good shape, and it's going to get worse the longer this war goes on for Putin. So if the war ends, that would, and obviously if the sanctions are removed, which they would be if the war ends at some point, then that would be very beneficial for Putin. But yes, he comes out of this looking stronger. He invaded another country unprovoked, and presumably, we have to see if Ukraine has to make territorial concessions to Russia, he will then, have taken 20% of Ukraine. And unless there are these very robust security guarantees, he could invade again. And now he'll be invited back to the United States. Maybe the Europeans won't want to deal with him for any time soon. But Russia's actually strengthened its international position in many ways while it's been fighting this war.
I think about something Tim brought up, and it just reminded us, was it a debate where Mitch Romney said, he was asked, or the candidates was it 2008 or before that?
Yes, 2012.
2012. And what was the
2012,
biggest, what was the biggest concern or national security concern for the United States? He said Russia and was kind of laughed off the stage. But is there some credibility, Angela, in President Trump trying to create some kind of economic cooperation or more economic cooperation between the U.S. and Russia to create a different future and relationship with Russia going forward? And is there some good to that?
Well, in the 1990s, there were a lot of American firms that were very active in Russia, energy companies, large firms, small firms. They were making money, and they were doing quite well. And yet the political relationship between the U.S. and Russia was very difficult. There were a couple of high points after 9/11 when the U.S. and Russia, with Putin, worked together in terms of the beginning of the U.S. campaign in Afghanistan. Also, I should point out that there were thousands of American business people in Ukraine when Russia invaded. That didn't stop Russia from invading. So, of course, there are arguments to build up economic ties with Russia. But I think history shows us, and even the experience of the last 30 years, Putin always likes to separate economics from politics. And you can have a good or a strong economic relationship with Russia, and it doesn't seem to have that much impact on what Russia does politically or militarily, particularly under Putin.
I asked what Russia would look like after this, but what about Ukraine? Because this is a country that 3 years ago, we were talking to you and so many other people thought this war would be over just in a matter of hours, a matter of days, a matter of weeks. But look what Ukraine has been able to do to defend itself. What does Ukraine look like on the other side?
Well, on the good side, Ukraine now has the strongest and largest army in Europe. It's developed very sophisticated technological capabilities. It's been using electronic warfare. It's much more sophisticated in that. On the other hand, of course, its economy has suffered greatly. It's had cities and villages obliterated by the Russians. So it's going to need an enormous amount of economic assistance and investment if it is to recover. It's also lost a large number of soldiers. We don't quite know, but I think for both Ukraine and Russia, it's in the hundreds of thousands. And it also has millions of Ukrainians are now living abroad because of the war. They need to come back and they need to help rebuild the country. So economically, it's in very poor shape, even though other aspects militarily it's better off. But it will still be in a very fragile state at the end of the war.
Angela, I was thinking about this a lot. Like, what is the relationship between President Putin and President Trump? And I know we've talked with you about this before. And what is it? Is Russia a great power? Is it a great economy? You already referenced that it wasn't. Their businesses, their alliances, their leadership. I mean, is it an economic and political model to emulate? I'm asking a little bit facetiously, but I'm trying to understand, why there is this relationship.
Well, it's not an economic model to emulate because it's essentially a hydrocarbon exporter. It doesn't have a very modern economy. I always, when I teach my students, I say, tell me how many products in your home are from China and how many from Russia. Well, you know the answer to that. There are many of them from China, they're none from Russia. So it earns a lot of money by selling hydrocarbons, but it doesn't have really a modern economy. It has a shrinking population. It has a major demographic problem, and it's had that ever since the fall of the Soviet Union and even before then. But militarily, it is a superpower. And that's in history. Russia has always been a great power because of its military, not because of its economy. And so it is, I think the largest nuclear power, the U.S. and Russia, the two nuclear superpowers. The Russians have more warheads than we do. And so in that sense, it's a great power. And because of the hydrocarbons, and of course, its location. It's the largest country in the world, sitting astride Europe and Asia. So it has many strong endowments, but it economically, it really does need to modernize.
Hey, just 30 seconds left, Dr. Stent. It does raise the question, though, how the rest of the world keeps Putin in check, given the strength of its military and given his ambitions? How does that happen?
Well, we know that he has ambitions that go beyond Ukraine, and that's why the Europeans are very worried about it. And now you see France offering, a nuclear umbrella to the rest of Europe. You see some European countries, even Poland, talking about should they acquire nuclear weapons. So this is one of the impacts of this brutal war, is at least countries in Europe reminding themselves that they're still vulnerable to a potential Russian invasion. And some of them are talking about the possibility of a war with Russia within the next 5 years.
Bottom line, 10 seconds. This is a good move. This is some progress.
On the call, yes, it is. I mean, hopefully if they implement this first ceasefire, of course it's a good move.
All right. My guess is we're going to be coming back to you a lot more still on this. And we so appreciate that we can. Angela, thank you so much. Dr. Angela Stent, Senior Fellow at the Brookings Institution, a member of the Council on Foreign Relations, and her book, author of Putin's World. Be sure to check it out.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
One of the things we wanted to talk about is, of course, the upcoming Fed decision tomorrow. We did see the Federal Reserve Bank of Atlanta's GDP now index, suggesting U.S. gross domestic product will retract 1.76%, so a negative 1.76% in the first quarter versus a negative 2.06% in its previous release on March 17th. So you've got that going on. Meantime, U.S. Treasury Secretary Scott Bessent, well, he doesn't seem too worried about U.S. growth. He spoke on Fox Business this morning.
The underlying economy is healthy. There is no reason we have to have a recession. Could we have a pause as we go from this incredible level of government spending, which is just unsustainable?
That, of course, is U.S. Treasury Secretary Scott Bessent earlier today on Fox Business. So let's get into it. The U.S. economy, tomorrow's Fed decision. Back with Tim and me is Dr. Stephen Skancke, Chief Economist Advisor at the Chief Economist at the Wealth Advisor, Keel Point. He's also a former U.S. Treasury and White House National Security Council staff member. He's out there in Washington, D.C. Then right here in our New York studio is Bloomberg Economics U.S. economist Stuart Paul. Hey, Stuart, I want to start with you. The Fed is expected to hold rates steady this week. Is tomorrow's decision really all about the dot plot?
Is mostly about the dot plot, and beyond what we actually get from the median FOMC members' expectations for the path of interest rates, we're also going to get a few clues about what they expect for the economy and what's going to be guiding their interest rate decision. So we're also probably going to see a downward revision of their expectations for 2025 growth, and we're also probably going to see an upward revision of their estimates for core PCE inflation for the year ahead. And between the two of those, the question is what ends up dominating? Is it the cooler growth that'll lead to more rate cuts? Is it the higher inflation that'll keep them on hold? We're expecting the median dot to still show 2 cuts in the year ahead. But if anything, the distribution of dots, we think, will be skewed to fewer cuts this year because of that uptick in inflation expectations.
Steve, is that the focus for you too, the dot plot? Is that what you're focused on as well?
Certainly it is, because it gives us some better understanding of what they're thinking about. That's sort of the first step, and then what Chair Powell says in his press conference. They've had a lot of disparate information in the various Federal Reserve bank branches, and it'll be interesting to see how that gets reflected in the board members' expectations.
Well, and I guess one of the interesting things too is, and let me ask you, Steve, we just know the Treasury Secretary, it's kind of interesting, saying the underlying economy is healthy, no reason that we should have a recession, and yet nobody's really ruling it out, right? Can you ever really rule out a recession?
Certainly not, because while the economy came into this year very strong, and even today with slower than trend growth in retail sales and all of the negative consumer sentiment that has been causing consumers to pull back in their spending, the economy is still robust. The labor market is strong, and yes, there's changes at the margin. But it would take a lot to tip the economy into recession. But at the same time, and I think this is what frightens markets the most, is that the president, his Treasury Secretary, his Commerce Secretary, have all said that basically they're okay if the market is down and if we tip into a recession. They're not worried about it because their larger plan is to reset, reboot, rebuild, recalibrate the economy, and they seem to be willing to accept that as a necessary cost if that should happen.
I just got to say, as you're saying this about, I'm seeing Stuart kind of smile a little bit. Stuart, you're smiling. Why?
Well, because I think that policymakers, even in the White House, they do care about economic outcomes. Of course, they say that there's going to be a bit of an economic realignment. But if we think back to past presidents, we saw George W. Bush inheriting in the first term the bursting of the tech bubble. We saw Obama inheriting the global financial crisis. S&P 500 in the first, let's say, 100 days that they were in office was off at most probably about 15%. There's only so much that sort of self-inflicted pain from policy decisions, policy announcements, tariffs being imposed and then being walked back that the White House can really stomach before they feel some pain. The key difference, of course, would be that was Bush's first term, Obama's first term. They were running for re-election. If Trump is seeing this truly as his last term and not part of some broader MAGA movement, maybe Steve is right. Maybe he's a little bit insulated. I think that policymakers tend to be responsive to public sentiment. I think that they tend to be responsive to voters. And when you only have, let's say, for example, 3 seats in the Senate that are going to be up in 2026, I think that, I think that it's probably a closer call than it might sound. They might be more responsive than you're suggesting.
So what are you saying, Stuart? Are you saying that policymakers will continue to be responsive, or they have this insulation because the president is not up for re-election and there aren't that many Senate seats that are coming up either?
I think that they're saying that they're going to be less responsive than they have been historically. I think that there will come a point in time where we do get a little bit less rhetoric out of the White House and a little bit more of a reaction to both the printed data and financial market activity. Carol very wisely noted that the Atlanta Fed's GDP nowcast looks pretty dismal for the first quarter. We don't think that it's going to be quite that bad, but printing, let's say, an annualized pace of 0.5% in the president's first term, the president's first quarter of this term in office, is not going to be something that's easy to brush off from a public sentiment perspective or from a markets perspective.
Steve, you worked in government, you're former U.S. Treasury and White House National Security Council staff member. What do you make of what Stuart is saying with regard to the responsiveness of policymakers?
Well, the story that they're telling right now and that the president is telling and his cabinet just sort of marches in step with him is that there is going to be pain, there is going to be adjustment, and he's willing to take that. I think what's different this time, and I don't disagree with Stuart, that the White House and congressional policymaking offices, elected officials, are sensitive, and they don't want to get hoisted. But I think what's different is that this president sees this as his last opportunity to do some things that will, in his opinion, remake the economy into a better place for the future. And anytime you do that, that's going to cause disruption, and in fact, a lot of it. Now, the other thing that I think we have to be careful about is that they can do a lot of things that reduce confidence, lower industrial production, lower consumer spending. And by the time they decide they've maybe pushed too hard, they probably have already set in motion the process of the economy falling into a recession.
Well, and we know we've heard from the administration officials. It's like, okay, we're going to do this, and then we're going to get the tax cuts, and then it's the reverse of the first time around. I mean, Stuart, he is said to be remaking the economy, but there is pain, and if he gets it wrong, could we see something problematic and maybe a longer-standing recession? Just got about 30 seconds.
We're not expecting so much of a long-standing recession. We're expecting about 1.5% full-year growth for 2025. That's still about half the pace that we saw printed in each of the last 2 years, a bit more than half of that. So not really a long-standing recession, but it's not exactly something that's going to bolster your voting base, and it's not something that you can take into the midterms with a lot of confidence.
not growth, at least for a little bit, or less growth. Guys, thank you so much. Steve Skancke over at Keel Point, and of course, Bloomberg Economics U.S. economist Stuart Paul.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, it is time for another edition of Bloomberg Plugged-In, your weekly look at EVs. Emily Griffeo and I talked about this yesterday when it was one of the most read stories in the Bloomberg terminal, and it's certainly worth revisiting because BYD shares jumped to a record after the Chinese automaker unveiled a lineup of EVs that it says can charge almost as fast as it takes just to refuel a regular car. Being able to charge a car in the time it takes a combustion engine vehicle to pull in and out of a gas station could be a game changer. It could convince drivers who aren't willing to make lengthy stops to actually go electric. Curious what Michael Stadler thinks about this. He's the CTO and co-founder of Xendee. It makes software that helps design EV infrastructure. He joins us from San Diego. Michael, I want to get your reaction to this BYD news in a second, but I got to tell you, I described your company as making software that helps to design EV infrastructure. Did I get that right? Because I had a heck of a time finding exactly what your company does.
Well, I mean, of course, we do electric vehicles, and thanks for having me. Good afternoon. But we do a little bit more than electric vehicles. We do also microgrids, and I think that's what we are discussing maybe today and how we charge these electric vehicles.
Okay, so you're watching closely the different types of EV charging systems, the different types of batteries. What'd you make of this BYD news? Because, look, here in the U.S., we're not going to be driving these vehicles anytime soon, I assume, unless the president decides to change the way that rules are structured around importing Chinese EVs. But if this is indeed something that can be done, it's a game changer for EVs, no?
No, it's very cool, and I also read it today. It's very cool to add 250 miles in 5 minutes, but it also creates a challenge for the distribution system and the infrastructure because you have to provide that power. And if you think about that, a lot of these cars are around, then it will be really a huge challenge for the utility system. And I think that's where the challenge starts with charging all these electric vehicles in that time.
So, Michael, tell us how your system works. And I'm just curious kind of where you are in this process in terms of acquiring customers, putting it to work. Give us some kind of size and scope.
Yeah. So we are a software company, as you guys said, and engineering company, and we help our clients putting the infrastructure in place which is needed to provide this high power. I mean, the utilities, for example, they have huge challenges to provide this power. I mean, it can take 7 to 10 years to upgrade the distribution system to provide this power, right? So this is why we help our clients to design, plan, install, and run so-called microgrids, which is basically cogeneration at the place where you charge the electric vehicles.
So who are your customers right now?
Well, I mean, we have a diverse portfolio here. I mean, of course, there are engineering companies installing this infrastructure to provide the power, but there's also, of course, fleet management providers who really want to implement electric vehicle trucks and all this. So we have multiple clients here, but mostly engineering companies installing microgrids and EV infrastructures.
How has business been, given the challenge that we've seen over the last couple of years, for American companies to sell EVs? The idea that they've gotten a little too expensive for consumers, the demand that a lot of these American companies thought would be there. Look what happened with Ford, look what happened with GM, even Tesla is seeing a sales decline this year. What has your demand been like? Has it held steady, or has it been affected by what customers are doing?
No, actually, it's steady. Yes, of course, there's uncertainty currently in the market, but I mean, almost 30% of all the people shopping around for new cars are still considering electric vehicles because electric vehicles are fun to drive, they are cheaper. I mean, I'm on my 4th electric vehicle and I would never go back to a gas car, right? So, no, for us, the market is stable and it's actually increasing.
Hey, so give us a little idea. We are Bloomberg, as we always like to throw out there. Give us an idea. I know we've been asking about customers. We are on your website, Walmart, Bloom Energy, Generac. You've got some academic universities, ASU, US, San Diego, Georgia Tech. But there's a lot of other companies. It sounds like you guys are doing a lot of research with folks. But give us a little bit more idea of where the business is and the growth that you are seeing, whether it's top line. I'm assuming you're not profitable yet, or is that? And
no. So we are, but the thing is, we are really rooted in research because what we are offering is a methodology which really helps you to install infrastructure, meaning generators, natural gas generators, batteries, renewables at the place where you charge your electric vehicle or where you need the power for a microgrid. We call this microgrid, right? And that can be a technical, challenging process, and it needs to be standardized so that you can do this really quickly and at an efficient cost, right? And this is why we still do a lot of research, and we are the cutting edge of research here also when it comes to new technologies. And this is why we're working with universities, because we don't have only this power problem on the electric vehicle side. I mean, if you think about data centers, right, they also want to get a lot of power now from the utility system, and they're talking about small modular reactors these days. So we have to research all these technologies and bring them in our software platform to provide this to our clients to efficiently plan those microgrids.
Hey, Michael, in terms of infrastructure here, what has this administration meant for your business? Certainly, he's close with Elon Musk, but that hasn't really helped the EV industry. He wants to roll back these tax credits. Does that affect your business?
So far, it hasn't affected us because I think it's. I mean, as I said, electric vehicles are for real and they're not going away, right? And the projects that we are seeing, it take a year, 2 years, or whatever it is. So you're not just canceling them because of the uncertainty that we're seeing right now. So far, we actually have a nice growth in the microgrid space, which is not only the electric vehicle space, and we're actually doing better than last year.
Michael Stadler, gonna have to leave it there. Thanks for joining us. Do appreciate it. CTO and co-founder of Xendee, joining us from San Diego.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We've got just about 18 minutes to go until we see the closing bell. Hear the closing bell on Wall Street. Busy little Tuesday. Charlie and Bill Maloney just breaking down the trade here, but we are off our lows of the session, but still down about 1.6% on the NASDAQ 100 and down about 1% on the S&P. Tim, one of the stories that was really interesting to me reading in is what investors are up to, slashing holdings of U.S. equities by the most on record. That was according to B of A's latest survey, underscoring the massive rotation that's underway in global markets. So we saw fund managers reported being about 23% underweight in U.S. stocks. And Tim, I think that was a plunge of about 40 percentage points from the previous survey.
Wow, it's a dramatic shift, and it shows just how quickly traders have ditched their optimism about American markets, with the S&P 500 tumbling just about 8% from an all-time high back in February. Let's see what our Drive to the Close guest has to say about this. We've got Scott Ladner with us, CIO at the RIA Horizon Investments. They've got about $10 billion in AUM, joining us this afternoon. Hey, Scott, good to have you on the program. I'm curious what you make of this Bank of America survey. Is this a sign that it could be kind of contrarian, that it's a time to buy, that so many investors have slashed their holdings?
Well, Tim, yeah, I think actually that there is some truth in that. I mean, the slashing of the holdings in the U.S. makes a little bit of sense, though. Look, Trump, if Trump has done one thing, he has basically bullied / scared both Europe and China into actions that they probably wouldn't otherwise have taken. So, with respect to Europe, getting off the debt brake and basically starting to spend money from a fiscal standpoint for the first time since really 2012, it can be game changing for the revenue for some of those companies. And then when you pivot over to China, and they're clearly worried about what Trump's tariff policy, trade policy is going to do to their already somewhat weak economy. And you've seen Xi pivot off of common prosperity. And so these two moves, which were really holding down the equity values in both China and Europe. Trump has kind of bullied them into changing those things, and that's actually to the benefit of equity markets in those two geographies, which are almost uninvestable for much of the last decade.
Yeah, I mean, the S&P 500 outperformance of the rest of the world has just been remarkable. But what does that do to U.S. investors that buy U.S. companies here? If we're seeing outperformance outside of the U.S., is that going to continue, given what we've heard from the White House and what we've heard from advisors, that essentially they're not necessarily paying attention to the markets right now and that with time they will recover?
So I think actually it makes the case for U.S. equities more compelling, but not probably for another quarter or two. So this is a time when frankly in the last 5 years diversification has been nothing but punished. So if you've done anything other than invest in the Mag 7 or the top of the U.S. market, and you're benchmarked at really anything, you've gotten creamed. And so you've been punished by diversifying. The last few months and probably for the next couple quarters, we think you're actually going to be benefited from diversification. And so this is a time when we're going to see some pretty good buying opportunities for U.S. stocks. I mean, we're getting some of these things at a bigger deal than we would have otherwise had because folks are rotating out of U.S. and into these other markets. We think that's probably more of a trade, but maybe a trade that's going to go on for a quarter or two, not for a year or two.
So you don't think, so you still think U.S. will ultimately outperform by the end of the year versus European markets, or not necessarily?
Not necessarily for the end of 2025, right? I mean, Europe and China have pretty big leads right now. So in terms of making up those leads, don't know if we get there. But as we kind of enter into 2026, when some of these fairly challenging things that Trump's doing right now with respect to the sort of the ideological shifts, those might actually have a chance to start paying some dividends on the deregulatory front or the taxes front or some of these other things by the time we turn the calendar into next year. So, I think there probably are some opportunities, but I'm not sure if the U.S. is going to catch them this year.
Are you worried at all about a recession? And do you buy the argument that we get from the administration that, all right, guys, it's going to be a little tough. We could have some economic pain, maybe a recession, maybe not. Nobody seems to want to kind of throw their hat into that ring definitively, it seems. But do you buy that idea that tariffs now, tax cuts later, and maybe regulatory moves, and that will be an engine for economic growth?
Yeah, I do buy that. And now we are clearly experiencing somewhat a growth slowdown because everybody's just, we're kind of entering an
M&A slowdown. Like I'm seeing a lot of stories where companies are like, nope, it's we thought we'd be doing a lot of deals and we're not.
Well, look, if you can't plan, you can't invest. If you can't plan, you can't act. And nobody can plan in an environment in which we don't really understand what the operating principles are going to be for this administration. We have some clues. We have some direction. We don't know sort of the direction of these things, but we know nobody knows anything about the specifics of how we're going to prosecute some of these policies. And so that's until we get some of that detail, and we will get it. I mean, it's not we're never going to have it. We will get it at some point, but until we get it, it's just a really tough operating environment, whether you're a consumer, an investor, or a business owner.
Well, okay. So what do you do then in terms of for investors? Do you put new money into equities? We've talked about equities, being cut back. Would you put new money into U.S. stocks, to overseas stocks, or would you play the fixed income world?
Definitely not play the fixed income world. So we think yields are probably about in the right place right now.
You do, yeah.
And so the yield drop, it makes sense in the context of tariffs, which everybody thinks tariffs are inflationary. Tariffs are deflationary.
Yes and no. I would argue with you because if you are putting tariffs on products that come in, that obviously raises their costs unless somebody eats them. But it also gives an opportunity for domestic producers to say, well, if those prices are higher, I can raise my prices. There is some of that argument as well.
There absolutely is. You're right, Carol. But I would just argue that tariffs at the end of the day are still a tax. And taxes are growth retardant, and growth retardant things tend to be deflationary over time. So it's not a 2025 deflation story. That's not what I'm trying to say. But as far as going forward, if we're looking at a 10-year yield, 10-year yield is going to care a lot more about.
You think tariffs are a good idea?
I think if you can no.
Okay.
Simply no. But there's a caveat to that though, which is important. I don't think that people in the market are pricing this the state of the world. So here, let me give you a state of the world which I think could exist.
And just got about 45 seconds.
So the state of the world that could exist that would be interesting would be if the reciprocal idea kind of takes hold and other countries actually lower tariffs on the U.S.
Right.
You might end up in a regime where you have lower global tariffs overall. Like that would be a pretty big boost to global growth that I don't think is in the market right now. But I'm not saying that's necessarily the base case, but that is a state of the world that is possible if under the sort of reciprocal tariff agreement where like, hey, we just want everybody to pay sort of the same rate.
All right, we will certainly see. Makes for an interesting investing year, no doubt about it. Got to leave it there, but thank you so much. Really appreciate it. Scott Ladner, he's Chief Investment Officer of Horizon Investments. As we mentioned, they've got about $10 billion in assets under management, joining us right here in our Bloomberg Interactive Broker studio.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.